Tuesday, March 27th, 2018, Monaco 64, home of alternative economics and contrarian views. I want to talk about debt and also distractions and the policy of divide and conquer, which of course is what governments have been doing for thousands of years. They try to get the public to be against another group or nation. And why do they do that? Well, it's to distract the public from the problems that the establishment of the government have created and are coming to the fore, these problems. Before I do that, of course, I'll look at the markets. It's just before 8 a.m. London. Yesterday, of course, we saw a big rebound in the stock markets. And I will look at some charts after I look at what the markets are doing, charts of the Dow and gold, so people can have a better idea of the bigger picture. The Dow finished up 669 points yesterday, or 2.84%. It's still down almost 5% on the month, though. S&P finished up 70 points, or 2.72%. It's down 3% on the month. NASDAQ Composite was up 227 points, or 3.26%. And it's still down on the month by 1.5%. So yeah, it was a good day. This morning, let's see where we are. Start with gold. Spot gold is 1355.40. The high's been 1357 and the low has been 1351. So gold continued to hold on quite well. Spot silver 1677, up 7. The range overnight has been 1665 to 1681. The Dow is up another 180 points this morning at 24,381, or 0.75%. S&P up 15, up 0.5%, 2674. The NASDAQ is up 57, almost 1%, 68.11. NASDAQ 100 future, that is. Currencies continue to do well against the dollar, especially sterling and the euro. Sterling is up marginally, 0.1% at 142.40. The euro is up 0.2% at 124.66. Dollar, though, doing fairly well against the yen. It's up 0.25%, 105.66. Yesterday, the dollar dropped further. The dollar index, it's still not near the lows of the year, but it broke recent lows. The only thing that seems to be holding the dollar index right now is the strength of the dollar against the yen. So considering the dollar rebounded quite well yesterday against the yen and today, it's positive that gold has held well. I've made videos in the past talking about how when the dollar goes up against the yen, that gold usually goes down. So that's kind of, that relationship right now is not working, which is a good sign for precious metals. So now I want to look at some charts of the Dow and also gold. First, let's start with the Dow. I've got like a chart going back to April 2017. It's a daily chart. And I've got some moving averages. We got the 50-day, which is the black, the 100-day, which is the orange, and the 200-day, which is the green line. So you can see that we haven't really tested the 200-day moving average, but a couple of days ago we got quite close, last Friday. And yesterday, of course, we've rebounded. Interesting thing about this chart is that the 50-day moving average is starting to move lower. And I'll bring another Dow chart here of the, I've looked at this chart before, the retracement from the high this year on the 26th of January at 26,616 and the low on the 9th of February at 23,360. The retracement, if you look at the prior to, from the middle of February to the middle of March, we stayed pretty much between the 38.2 retracement and the 61.8 retracement, which is a normal thing. These are important Fibonacci golden mean levels. And then we broke quite sharply after the 21st of March. We almost went back to that low last Friday, and now we've started to rebound. We're nowhere near yet the 50% retracement or the 61.8 retracement. So I still think the Dow is not out of the woods yet. As I've said before, I think the high on the 26th of January is going to be the high for a long time to come. So now gold, and I want to talk about gold because I made a video. It was on the 7th of March this year, and I said gold looks set to take off, bullish pennant or flag, if you want to call it that, targeting 1500. And it might have taken a little longer for this breakout, but it looks to be working right now, this formation, and we are getting the breakout. And the target would still be around 1500. Of course, before that, we've got a couple of key levels. We've got the high from this year at, let's see, 1365 in the spot, and the high in 2016 at 1375. So, but as you can see, it looks like we're breaking out of that flag formation, or pennant or wedge. So it's more like a flag, I guess. And I've got the moving averages as well here. We're comfortably above the 50-day moving average now. We've been below it. The 50-day also starting to stabilize and turn up a little bit. And of course, the 100 and 200-day are where they should be. In a bull market, the 200-day should stay below the 100, and the 100 should stay below the 50. So yeah, my call hasn't changed. When it will get there, 1500 or thereabouts, difficult to say. But it won't be, maybe sometime in the summer, early summer. So what about these distractions and divisions and divide and conquer? What are what's the West, especially the U.S. government, the British government, UK government, trying to get the people to look away from? Well, I personally think, first of all, is the debt. So a lot of you probably have seen the US debt clock. It took a while to get to 20 trillion, but now we're already at 21 trillion. The debt to GDP, 106%. So this debt is going crazy. And as I've said before, with fiat money, you need to keep the debt going or else everything implodes, because the money needs to be, the money is debt in the fiat money system. And if you pay back the debt, if you destroy the debt, the economy implodes. The only problem with this is that you could get hyperinflation. Hyperinflation has got nothing to do with costs or labor cost or wages. Hyperinflation is a loss of confidence in that fiat money. When people realize that there's no way out, we're never going to be able to, this debt is going to snowball, then people rush away from that currency and they go for real assets or commodities, even companies that produce real goods. So even the stock market might do well. You never know. So that's why it's difficult to say if we're going to get an implosion, a deflationary collapse, or a hyperinflation. I think we're on that. It's like it's like a coin. It could flip either way. So that's why it's important to have physical gold and silver, in my opinion. And even companies. The German stock market didn't do badly during the hyperinflation in 1920. In the UK, the situation is the same. Look at the UK national debt clock. We're at almost £2 trillion, and the UK GDP is $2.5 trillion. So we are over 100%. If you do the exchange rate, that's about $2.8 trillion of national debt. So the UK is in the same boat. Recently, we had the UK budget, not the the budget, or the chancellor talked about how it's going to take until 2025 for them to balance the budget. Right now, we still have a budget deficit, and I've made videos about this. And I noted how the previous Chancellor Osborne in 2010 said that the budget deficit was going to be balanced by 2015. Now it's going to take another 10 years. It's just ridiculous. And in the U.S. as well, this latest Trump tax bill is going to make the debt even worse in the U.S. and deficits increase. And for the UK, the other reason why I think we're seeing a lot of distractions, we're seeing the Russian bogeyman, Putin is evil, Putin's done this. Yesterday I listened to Prime Minister May in Parliament, still, saying she's got support from the EU, from the US now. They've expelled Russian ambassadors. And she still doesn't have any concrete proof. She says, it's highly likely that Russia was involved in this poisoning incident, and she said there is no alternative, alternative picture here in this. It's the Russians, but she doesn't have any proof, and she hasn't allowed the Russians to be involved in the OPWC. I think it's Organization for the Prevention of Chemical Weapons. So she hasn't followed the protocol there. But then you look at some of the headlines, and these are from today. London house prices, and you put them up today, and what have you got? 5 London boroughs where house prices have fallen the most. The Telegraph. London property slump most widespread since financial crisis. The Guardian. London house prices, capital slump narrows north-south divide. So housing is so important for the UK economy. It's what the credit-driven UK economy is based on. When house prices go up, people feel wealthier. They can, they spend on their credit card. They rack up other debts, consumer debt, and now this is all seems to be unraveling, and it's starting in London, which is normal because it's in London that it started. It's where the Bank of England money spigot started pumping, with QE about 9-10 years ago, and now it's normal that it's how can I say, the slump is starting here. So is it any wonder that we're getting so many distractions now, geopolitical, and a new Cold War, so to speak? And the other point I like to make, this divide and conquer seems to be working quite well, because there's an article here on Zero Hedge today. It says China applauds Putin's win. I guess that's his election win. Backs him on Skripal, who's the Russian double agent that was supposedly poisoned with his daughter. And he says, hails China's strategic partnership with Russia. So, yeah, definitely. And all the trade wars against China, and it all seems to coincide as well with the Petro Yuan, the launch of the futures contract yesterday. Is it coincidence? I'm not sure. And today, by the way, the September sour crude, the SC, I've looked into it, is not Shanghai crude, it's called sour crude. That's traded another 40,000 contracts today. So yesterday was not just a flash in the pan. So yeah, that's where we are. I think there is a lot of divide and conquer. They want to keep the public's attention away from how dire the economic situation is. And how do they do that? Well, they point you to Russia, China, China's cheating on trading. Russia is flaunting international law. But no one focuses on the real problem, which is the debt that they had to create during the great financial crisis to bail everything out, to bail the bankers, all the big debtors. And now that's beginning to unravel. It will be interesting to see what happens. As I said, physical gold and silver, try to have little exposure to the financial system as possible. And yeah, if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. And you can also follow me on steemit.com and on Twitter. Thank you.